Now, looking ahead, regional growth is expected to remain moderate in 2025. Excluding Guyana, the Caribbean Development Bank projects regional growth of 2.5%, with performance varying across borrowing member countries. Guyana's expansion is expected to slow to 11.9%, following its rapid growth in oil production in 2024. Nevertheless, the country's performance will remain a key contributor to the region's economic growth. Hence, including all 19 borrowing member countries, the region is forecasted to grow by 4.6%. Among other commodity exporters, growth is expected to gain momentum as they continue to recover, while service exporting economies are projected to expand by 2.2%. Tourism is likely to remain a key driver of economic activity. Construction, supported by public and private investments, is also anticipated to contribute positively to near-term economic performance. On the fiscal front, most governments are expected to maintain primary surpluses, which should further strengthen debt positions in 2025. While the Caribbean region is on track for continued growth in 2025, there are several risks that could alter this trajectory. Internationally, geopolitical tensions, along with a resurgence of protectionist policies, could elevate uncertainty in global markets, disrupt supply chains, and exert upward pressure on commodity prices. Additionally, policy shifts in the United States, including evolving policy priorities, adds to the uncertainty of the outlook. Potential slowdowns in major trading partners, particularly the United States, could dampen demand for regional exports. Domestically, the ability to execute critical infrastructure projects on time will be crucial. Delays could hold back growth in industries like construction, energy, and transportation. Moreover, our ever-present vulnerability to natural hazards remains a significant concern. As climate change intensifies, the frequency and severity of extreme weather events increases, and the risk of disruptions to economic activity grows. These natural hazards could not only disrupt economic activity, but in some cases may reverse developmental gains and endanger fiscal and debt sustainability. Adding to these risks, with elections anticipated in many countries in 2025 and 2026, there's an increased likelihood of fiscal pressures and policy shifts that could slow reform momentum.